We're at Super Investor Asia in Singapore. Manish, so good to see you again.
Absolutely, it's a pleasure.
India market, the private equity market, has not been, a very exciting place for LPs for a number of years, and yet Kedaara raised your first-time fund, the largest independent first-time fund in 2013. So congratulations first.
Thank you.
But now things seems to be changing, right, in terms of LP attitude towards that market. So what is different today?
Sure. Firstly, thanks for having us. I think we were very fortunate. India 2 years ago, at least perceptions were extremely negative. So when we went out fundraising, people said this is a hope, you won't have a hope in hell to actually raise the money. You'll be happy with 200, 250. We stuck to our knitting. We believe we had a very unique strategy and we were successful. Well, success really depends the next few years as we deploy the capital and we realize our exits. On the macro, I think while the optical move has changed completely, from 2 years ago, it's essentially the government and the change in government. You had a government which was perceived as a lame duck, which there were lots of stuff stuck in the central government. Many permissions were not granted. Much more expenditure, like in the past, on providing subsidies, which were sort of a vote bank to the government, and not putting money in real infrastructure and investments. That part, we believe, has changed completely. We have a new government who has a majority stake in the lower house of parliament. We believe it has a very dynamic prime minister and a very the entire cabinet of ministers is really focused on economic reform. So I think the mood from that perspective has changed dramatically. Having said that, people have expected change to happen immediately. And I actually think while the optical and the mood, which is important, has changed completely, we still haven't seen the trickle-down effect on numbers and balance sheets as yet.
Okay. So with that mood and attitude change, do you have a challenge of too much capital chasing deals? Is there sort of things getting heated up?
So I would say I would look at the two markets differently. Yeah. I would say yes to that in the public markets are concerned, but I would say the private markets haven't yet reacted that way. Let me see what I mean. The public market, India is a relatively shallow market in terms, the total market cap a couple of years ago was $1 trillion. As soon as you have an influx of money from sovereigns and pension funds, which is what happened the last 12 months, the valuations have just shot up. So while the earnings haven't improved significantly, or in fact that much at all, the influx of capital have raised multiples significantly in the last 12 months. And India already is, if you look at most of the global fund managers on the public side, they're almost overexposed to India. So in India for the next 12 months, for it to maintain the momentum on the public capital markets, needs a lot more domestic funding and domestic capital. On the private side, as you were referring, the experience of the international LP in India has not exactly been positive, especially the 07, 08, 09 vintages, where there was too much competition, valuations were very high, and even people who came in reasonable valuations either couldn't get out or got hammered by the foreign exchange. So I think while the optimism has spread at the macro level and amongst corporates in India, our belief is that the common LP is still slightly critical on India. I think is extending a hand of hope and wants to see change happen. But the amount of capital in the private equity space amongst LPs hasn't improved dramatically. Okay. And if anything, there's been a systematical downsizing on the number of private equity players in India. So if you see the number of funds active today versus those in 07, 08, I don't have exact numbers, it would be close to a half. And remember, all the private equity divisions of most of the global banks have almost shut down the merchant banking divisions in India. So it's an interesting conflux where the public markets, you see a lot of capital, but on the private side, while there's hope, capital is not flowing in as much, the number of GPs has decreased, and I think though in the next 2 or 3 years, as you see the effect, then you would see an increase
So
in
private equity capital has not increased that much. But with everything that's going on, what about day-to-day deal valuations for GP?
So the deal valuations, I think, have been okay so far. We've closed about 2 or 3 deals the last 3 or 4 months, and those were reasonable valuations because many of these discussions started before the Modi government came in.
Yep.
I think the deal valuation the next 12 months will be significantly higher, but that's driven less from competition amongst private equity firms because to our point earlier, there aren't that many, it's far less competitive and the private equity firms are a lot more collaborative instead of having the crazy valuations and one outbidding the other in the 07-08. But the reason the valuations are being driven up is because the Indian promoter, whether he's private or public, is influenced by the public markets, and private equity then becomes a proxy to what the public markets are. So as the public markets have essentially shot up in the last 6 to 8 months, the private equity expectations from the promoter or the owner of the company are similar rising.
Okay. So what are some of the interesting sectors that you look at or you think that are the key sectors for the next several years to invest in?
You know, as Kedaara, we tend to be sector neutral and sector agnostic. We tend to be playing much more in the boring old world industrial services sectors than the new world e-commerce retail sectors. We believe the valuations in the e-commerce retail side is something that we can't justify. Maybe we just aren't smart enough. We don't have the investment acumen or the ability to look at these spaces the way many of the global investors do. So what we have done, and I'm speaking more of Kedaara, is obviously we look at a variety of different sectors and industries and are very value conscious in terms of entry, and we're very thoughtful about our exit. But the few things we do is we try to pick proxies to these, I don't want to say crazy, but high growth e-commerce or consumer retail plays. So for example, one of our portfolio companies we've invested in, we love the company, is a logistics company. It's not playing in e-commerce directly, but has now become one of the largest infrastructure and logistics providers to the e-commerce retailers out of India. So essentially, it's a proxy for us to play the e-commerce scale, but it's a company we've deployed capital which has positive revenue, positive EBITDA. We see cash coming in, and we make sure accounts receivables are not more than a month old.
Okay, last question. In the past, one big complaint about India private equity is that it's very difficult to do business for companies, for your underlying companies, because of heavy regulation and all these issues that we were all aware of. So with the new government, there's a lot of talk about change. So when do you think that would really trickle down to the day-to-day kind of business dealings?
I think it hasn't changed as yet.
Yeah.
And I think what worries me is, as a country, we often shoot ourselves in the foot by selling ourselves in advance of reality. So in Davos this year, once again, we did the Make in India show, and which worries me because the current government is probably the best we've gotten in the recent past. It's a government that not only me, but most of the senior industrialists in the country believe have the ability, the capability, and the will to make the changes happen. But it'll take at least a year or 2 years to actually effect those changes through both houses of parliament, because as you know, the government has majority in the lower house of parliament, not in the upper house. So often to pass many of these regulations would need a joint sitting of both houses to pass this. So I think the important thing, unlike the past, the government not only has the intention, but the ability to effect change. But we as a country, as industrialists, as investors, need to give time to the government to get it there. And I would say in the next 2 years, you should see a significant change in the ability to do business and the ease of doing business in India.
Great. Thank you, Manish.
Thanks so much.
Thank you for the
pleasure
insight.
seeing you.
Bye.